Good morning, this is Steve O'Hare from Signal Centre, and today is Wednesday the 19th of May, and welcome to the weekly technical roundup on crude oil. We're going to look at WTI and Brent crude oil this morning on the Markets X platform. So let's dive into it. I've not really done a lot on these charts since last week, since we spoke. So I'm going to break it down from the higher time frames, from the weekly down to the hourly, see if we can get some decent technical levels to watch out for in the coming days. Obviously, we've got inventories due out at 3:30 UK time later. Also, we've had the US Gulf Coast has been heavily impacted by bad weather, and that's expected to continue into the week, so that could hamper production there. And also the Colonial Pipeline had an outage again after the cyber attack last week, which took the Colonial Pipeline out for a week. There's been problems with some customers finding delays in ordering upcoming shipments due to the added security measures. So let's move on to the technicals, and we can see this clearly. This very clear upward trending support line, and this is actually impacted on 4 points. However, last week's candle for me is a little bit of a warning sign for this bull run that we're in. And obviously, after the impulsive move higher, we are seeing a correction. This could potentially be an A, B, C, D correction. So we have the move from to A, the correction higher to B. It hasn't taken out the previous high, and so potentially we have another move lower towards C. So I'll look at both positive and negative technical levels. At the moment, I've drawn in from this weekly chart, and you can see it'll make a little bit more sense on the shorter term charts. A level on the WTI crude oil at 66.76. That has offered resistance over the last 3 weeks. And on the bid side, we see a level at 62.86, which is just below the upward trending support line, which comes in today at 63.86, or this week at 63.86. So let's take a look at the daily chart, and we're highlighting a couple of levels below that 60, 63. Let's put it in blue so it gives us a clear indication that it's a support level. And also the 57.26, which we've mentioned plenty of times over the last few months, actually, because we believe this is a real line in the sand for the bulls. A break of this support line should quite easily open up a move towards the $54 level. On the top side, 66.76 it has held again this week, and you can see this is, let's take it down to the daily chart. This is 5th of May, 12th of May, and the 18th of May. We expect a bit of volatility later on, as we say, the inventory's due out. So if we manage to cap price action again here, then that really does open up a move to the downside. However, a break above here would be positive, and then the 67.78 level is in clear sight. So the potential for that move higher, here we can see the impulsive move higher and the correction lower. So looking at the hourly chart, we'll jump straight to the hourly chart. Sorry, going back to the weekly. And sorry, it looks a bit messy. I've included the Ichimoku cloud. For me, that's a pretty good indicator once you're in a trend. Obviously, you can see the price action has been very choppy over the last few weeks, and there's no real sign of trend here. The supportive nature of this upward trending line is still a potential level to sort of like watch, to sort of like set longs from, but a break below the 62.86 and the long bets for me are off. Looking at Brent crude, we've got different levels obviously in the Brent crude oil. It's trading at a premium. On the weekly chart, we can see that 69.80 has been a similar level to the levels we see in WTI crude oil. And on the supportive line, we've got $66. Below $66, we see 63.90. but the main support level that we want to watch before this vacuum move lower that we're expecting at some point is $60.44. So trading handsomely above there at the moment. So not really something on the radar in the next couple of days or week ahead. On the daily chart, we can see we're above the Ichimoku cloud. We've got good support down here, as well as the horizontal support. We've got the cloud support, and yesterday's daily candle is interesting. It's a bearish outside candle. So again, a little bit of a warning sign for the bulls that there is potential for a deeper correction. Again, the inventories this afternoon will help that play out either way. For our chart on the Brent crude, the levels to watch, as we've said, a break above 69.80 or $70 opens up a move to the this year's high at 71.10. I hope that's helped, and look forward to joining you next week. Thank you.